I want to thank you this morning and or almost afternoon for some of you folks for spending your either breakfast time if you're on the West Coast or lunchtime if you're on the East Coast or brunch time somewhere in between with us this morning. We're going to be talking about everyone's favorite topic in the industry, HOTMA. I am lucky enough to be here today with a longtime partner of HAI Groups, with Nan McKay Associates, Samantha Sowards, and a friend of mine. We've had the opportunity to work together for a while now. We've done a couple of these, and I say we, she's done a lot of these, and I've had a couple opportunities to introduce her, and I'm going to do so again today. And we hope to be able to provide you with some information and certainly try to answer as many questions as possible. I'll remind any folks unfamiliar with Zoom that there is a question and answer option where you can submit questions. There's a chat function as well. They'll be fed through the platform to us, and we hope to get to as many as possible. So start feeding that queue throughout today's presentation. So with that, I'm going to turn it over to Samantha, who's going to walk through some information, as I mentioned, and we can get underway. Sam, it's all yours.
Awesome. Thank you, Brian. Good morning or afternoon, everyone. I'm on the West Coast, so I'm going to say good morning. I've just finished my coffee, so hopefully I'm ready to go. We're going to talk a little bit about the timing of HOTMA as we go through this, because I think regulations aside and changes aside, probably the most difficult thing with HOTMA has been just knowing what to apply and when. So the presentation that I have is focused on PIH programs, public and Indian housing programs. So we're talking public housing, HCV, PBV, but HOTMA is applicable to a lot of other programs as well. And so again, I'll be kind of orienting you about where we are with PIH programs, but if you have questions for other programs like tax credit, multifamily, I can talk about those as well. And, we can talk about timing for that as well. So we will go ahead and get started first with a poll. So I will let you guys pop up the poll. So the first question is, have you attended any HOTMA trainings before? So your answer options are yes, too many, some, but I need more training, or no, this is my first one. So go ahead and take a moment and click on your answer, and we'll see, just get a sense of how much training everyone's had on HOTMA before. Do I get to answer too? Let's see. No. All right.
Give everybody another second or two.
Okay. So let us know. Lots and lots of HOTMA training. Some, but I need more. Or no, this is my first one. All right, let's see. Looks like some, but I need more training is the majority of participants, but there are a good number of you who this is your first HOTMA training, so welcome. We'll talk about some options for more comprehensive training kind of as we go through as well, since we're just going to kind of orient you, with what's going on right now. And looks like 21 of you have had too much training, so I get it. I feel like I've had too much HOTMA training too. All right, so let me do just like a brief introduction, and then Brian, are you gonna just kind of pop in with questions as I go? Do you wanna?
We'll pepper you with questions if they're relevant to the slide topics, and if not, we certainly at the end will have an open session. So we'll be monitoring the chat though. Yes.
Awesome. So the purpose of this slide is a couple fold. The first thing is to say that HOTMA has been around since 2016. So it was signed into law back in 2016. And I like to use this slide in today's environment to remind folks that when there are changes, like a new law being signed or an executive order or something like that, that we as housing providers still have to follow the regulations that are on the books for our programs, and we can't act on changes until there are regulatory changes for our programs, right? So while HOTMA was signed into law in 2016, and it was a huge sweeping piece of legislation that touched all sorts of different housing programs, we did not apply any of those income and asset provisions until now. It's been years and years and years, right? And so it's important to remember that Congress's job is to pass legislation, and then HUD's job is to interpret that legislation. And then we, as housing providers, once it's been interpreted and put into the regulations, then we enact whatever the legislation is. So that's kind of the purpose of that, is to give you an overall sense that, even though there are a lot of changes going on right now, we need to follow program regulations until HUD tells us otherwise. So HOTMA, like I said, is a sweeping piece of legislation. It has tentacles in all sorts of different housing programs. Title I of HOTMA has 14 different sections that impact the public housing and Section 8 programs. I just want to be clear when I say Section 8, what I mean, because when I say Section 8, that means different things to different people. So when I say Section 8, I mean housing choice vouchers, I mean project-based vouchers, and I mean the project-based rental assistance program, PBRA, or HUD's multifamily program. So if you want to kind of break that down, I mean programs where we submit 50058s and programs where we submit 50059s. All of those are under the umbrella of Section 8. So HOTMA impacts public housing. It impacts all the different Section 8 programs. And so the initial rulemaking that first came out back, in 2017, had mostly to do with the project-based voucher program, PBV, and had a little bit had some things to do with HQS inspections. We, when it was signed into law back in 2016, read through it obviously, and we were waiting for the big piece of it, which is the stuff that has to do with income and assets and adjusted income and interims. And we didn't have a final rule on that, as you can see, until 2023. So there's there was a big gap in time between when it was signed and when we actually had information on what we're supposed to be doing with HOTMA. There are still pieces of HOTMA that haven't been enacted yet, and we're all the way in 2025, right? So what we're going to focus on today, although you can ask questions on other pieces of HOTMA if you'd like, but where we're focusing today are on sections 102 and 104 of HOTMA. And the reason for that is when you and I say HOTMA out loud in conversation, this is probably what we mean, what we're talking about. 102 and 104 are the sections within HOTMA that deal with all the rent calc stuff, right? All the income, assets, adjusted income, annuals, interims, all of those big changes that lives in sections 102 and 104 of HOTMA. And so while typically I don't memorize, sections of legislation, because who wants to do that? I'm going to use this term. And so I wanted to clarify what it meant. So 102, 104 of HOTMA, all that's saying is the sections within HOTMA that deal with income, assets, adjusted income, annuals, interims, the big piece of HOTMA that we've all been talking about now for the last couple of years. Because again, HOTMA has other sections that impact other things in the program. So we're going to focus in today on sections 102 and 104, which is, again, when we all talk about HOTMA, what we're really talking about. Like I said, our main focus, our PIH program, so public housing, HCV, PBV, but HOTMA affects pretty much all the programs probably that you run. Maybe not some local programs, but all the federal programs that you run are touched by HOTMA typically. So public housing and your housing choice voucher programs, like I said, and your project-based voucher programs, but also, like I said, if you have multifamily Section 8 units, those 50059 properties, that's impacted by HOTMA as well. The home program, HOPWA, if you have housing trust fund units, 202-811 or CDBG funds, all of those are impacted by the legislation itself. The other thing is that even though you don't see the tax credit program on your screen, tax credit units are impacted by HOTMA as well. And the reason for that is in the tax credit program, we use the Section 8 definition of income, the same definition of income as public housing, HCV, PBV, PBRA, right? When that program was put on the books in the 80s, they didn't reinvent the wheel and come up with a new way to calculate income. They do it the same way as, all the other major HUD programs. And so HOTMA changes the Section 8 definition of income at 24 CFR 5.609. And as a result, it means the tax credit program also is using HOTMA. And what I'll say about the tax credit program, again, even though we're not focused on it, this is important to know if you have tax credit units, is that you absolutely must go on your state allocating agency website and figure out what they want from you with HOTMA. Some states have already enacted HOTMA. Some states are waiting till January. It's all over the map about when they're enacting HOTMA. It's also all over the map about which pieces of HOTMA they're doing, right? Because state allocating agencies in the tax credit program have a lot of power to design their own programs. And so some of them are doing full HOTMA implementation, some are only doing pieces of HOTMA. And so it's really, really crucial if you have tax credit units to go on your state agency website and figure that out. If you have Yardi software, or even if you don't, Yardi has a lot of information on their website and great charts and stuff like that. They have a whole team dedicated to figuring out what states are doing what as far as HOTMA. So I would recommend you could take a look at that. But your first step really should be going on your state agency website if you have any tax credit units. So as I said when we started this, I think the biggest challenge with HOTMA is not necessarily the change in the regulations, it's figuring out what you do and when. We're all used, I mean, not to this scale, but we're all used to the regulations changing, to having to, go read a regulation and figure out what we're supposed to do. What we're not used to is kind of a implementation that starts and stops, right? And so this timeline up here is a timeline again for PIH programs, but I wanted to walk you through it for a second so you could kind of see where we are. So as I said, HOTMA was signed into law back in 2016, and that's all well and fine, but we have to wait until HUD interprets that law and tells us what to do, right? And so for 102, 104, the pieces that affect rent calc, essentially. We didn't have a Federal Register notice until February 14th, 2023. And so that final rule came out February 14th on Valentine's Day, right? It was our gift on Valentine's Day. And it had all the regulations for HOTMA 102, 104. And in that notice, it said that HOTMA was effective January 1, 2024. Okay, so that's what we thought. We're like, okay, February 2023, we have almost a whole year to figure this all out and implement HOTMA. And we started updating our policies and doing all that, right? That's all well and fine that there was a Federal Register notice, but typically in our world, what Federal Register notices do is they tell us what's going into the actual regulations, into the CFRs, right? And it's regulatory language and it's kind of dense and it's not very easy to interpret. What we usually wait for in PIH programs is a PIH notice, because a PIH notice is an interpretation of the regs where HUD actually tells us, like, practically, here's how you actually implement this. Like, the reg says this, but this is how you actually do it, right? And so we were waiting for that to come out. And finally in September of 2023, it did, right? So HUD published PIH 2023-27. It was a joint notice with HUD multifamily. So if you have multifamily units, it's the same notice. And I say this is your HOTMA guidebook, right? If you have HOTMA questions, if you need to know what the reg changes are, PIH 2023-27 is where you go for your implementation guidance. When that came out, HUD said, oh, never mind. The compliance date is actually January 1, 2025. They pushed the compliance date back a year. Now, HOTMA is still effective January 1, 2024, technically. Technically, the CFRs, if you go look them up, are HOTMA CFRs now. None of the old words are in there. So it's effective, but we don't have to comply with it yet, is what the notice said. It said, okay, you have till January 1, 2025. Had reissued that notice in February of 2024 with some corrections. I like to think that I made them correct it because I sent them 10,000 questions and some of those made it into the notice. So I pat myself on the back that I did that. I email the HUD folks all the time on this, and they sent me an email once that said, you are by far our most frequent emailer. And I feel like I won HUD that day. But anyways, I will give you that email address as well. I think it's in my slides a little bit later, but you can email them questions too. They're great about answering them. Anyway, so at that point, we thought January 1, 2025. Well, we were getting ready. The year was drawing to a close, and we were like, okay, we're supposed to implement this, but we don't have the tools to do that. And so on September 18th, 2024, as you know, you're probably well aware, HUD delayed compliance with HOTMA past January 1, 2025. They sent out an email to executive directors and they said, never mind, January 1, 2025 is not a feasible date anymore. We're delaying compliance. And at that point, they did not tell us what the new compliance date was. So we were just waiting. Well, December of last year, December 18th, 2024, HUD put out a notice. It's notice PIH 2024-38. And in there it said, okay, we've decided to do a phased approach to HOTMA. Some of HOTMA is going to be applicable July 1st, 2025, and the rest of it is going to be applicable, we don't know when. Okay, and that's the world that we live in right now. So the other important notice that you need to make sure you have is this PIH 2024-38, because that tells you what is applicable July 1, 2025, right? That was a couple weeks ago. And then everything else is a to be determined compliance date. We don't know when it's going to happen. Now, why is that the case? Why have we had this phased implementation? Why can't we just do HOTMA at this point? The reason is that on top of this massive regulatory change, HUD has also decided to replace the PIC system with a system called the Housing Information Portal, or HIP. And you've probably been hearing about HIP. And basically, housing authorities cannot implement certain provisions of HOTMA without this transition to HIP in place. The reason for that is that the current 50058 form is not set up for HOTMA. It's the old version of the regulations. And from what I've heard about PIC, it's a bunch of Excel sheets that are like glued together with bubble gum and a prayer, right? It's not a system that is easily amended to like create a new 50058. So HUD has released a new HOTMA compliant 50058, but we can't use it in the PIC system is what they've been telling us. And so we have to use it in this HIP system, which will be a cloud-based system. So for a long time, HUD and software vendors have been working together to get this HIP system up and running. And basically what HUD said was, look, for the July 1 deadline, we can have housing authorities do the stuff that is not dependent on HIP, but for everything else, we have to wait until the HIP system is up and running. And that's been what HUD has been saying forever. Now, a couple weeks ago, at the NLHA conference, someone high up at HUD spoke, and they said, oh, actually, we're thinking about keeping PIC and no longer transitioning to HIP. Now, they didn't put that in writing, but they said it out loud there, and they've now said it out loud at a couple other conferences. I've been told over and over by people at HUD and software vendors that PIC is not functional and that's not possible. And so it remains to be seen what's going to happen. But officially in writing, HUD is still saying we're transitioning from PIC to HIP. But there are murmurs that either they're going to stick with PIC because they've magically found a way to fix it, or that there's going to be a different successor system, I've heard, that is neither PIC nor HIP. So stay tuned. But essentially what this means is that we're able to do these July 1 things I'm about to talk to you about, but the stuff that's dependent on using a HOTMA 50058, that to be determined really is a to be determined. We really don't know when that's going to happen.
Sam, just to jump in for a second, because thank you for setting up that context. That's shows, without even getting into the specifics of it, that we're in a bit of a situation. A lot of questions have already been coming in, and they speak to just that, the delay and the change, and where do I look to see what's next. Two things I wanted to ask about real quick, because you mentioned there were two PIH notices that are worth you, and then this is for anybody on the call, and us too, having on our desk. Can you just remind us, those were the PIH notice in the 23, 27 was one, I believe, and you said the last one, PIH 2024 to 38. Those were the two. Kind of keep those on your desk for now, when you really start getting into this. Did I hear you correctly on that?
So 2023-27 is the huge, I don't even know how many pages it is, but the huge HOTMA notice. That's basically your HOTMA guidebook. And then 2024-38, I'm going to dig into that one in a second, but that's everything that's effective July 1. So right now, those are your two places to go for HOTMA information.
Perfect. And so to the TBD side, which again, we've had a few different questions, so we're going to try to answer some of that now. And if you're saying it really is TBD, and I'm hearing this out in the conference world as well, like there's a lot of we just don't know yet. That information will come directly from HUD is the expectation at some point, right? As far as
Yeah.
you know.
Yeah, there are political considerations for this. There's murmurings that folks are unhappy that HOTMA hasn't been implemented yet. There's, considerations with the fact that software vendors have spent hundreds of hours and millions of dollars trying to develop software that is compliant with HIP. And so to not go to HIP, where does that leave them? So I anticipate that this is going to be a very hot button topic, that there may be lawsuits, that, things like that. So I do, if I were a betting person, which I'm not, because I don't like spending money on gambling, but if I were, I would bet that we're not going to see HOTMA compliant 5/8 in 2025, and probably not anytime soon in 2026. Now, I'm not at HUD. I can't say what they're going to do, but for years they've been saying that PIC cannot have HOTMA compliant 5/8, and software vendors have been saying that as well. So I don't know how suddenly it can. And the HIP system, it had stalled as far as development went. So I think we've got a while.
Yeah, well, you did win that one day at HUD, so we will take your answers with a little bit of extra oomph to it. But
Yeah.
anyway, I digress. You answered a few questions for us. Thank you so much.
Okay. Okay, so let's talk about that 2024-38 notice that was released in December of last year. This is a really important notice because, again, it talks about the HOTMA provisions in 102 and 104 that PHAs have to comply with no later than July 1, 2025. And again, that was a little over 2 weeks ago. So you're doing this now. So let's talk about what that means. When I say you have to comply with it July 1, 2025, what I mean is all transactions with an effective date on or after July 1, 2025 have to be processed using the requirements in that notice. Meaning your annual re-exams, right? When you're doing an annual, you're not starting a July 1 annual in June. You're going 90, 120 days back before the effective date in order to process your annuals. And so some housing authorities, right, were doing this as soon as March of this year. They needed to make that quick transition because, again, it's for transactions effective July 1, 2025 or later. So if you haven't started doing this, you need to do it right now. And so that means new admissions, it means interims, it means annuals, all of it. Again, it's not full HOTMA, but it's the things in this notice have to happen for your research, annuals, interims. Research is the same thing as an annual, sorry, new admissions, right? Effective July 1, 2025. And so I just want to be clear that, that July 1 deadline is just the things in this notice. We'll go through them, but I want to be clear on that. It's not full HOTMA. The question I often get, since I write our model policies, is, well, what about our admin plan or our ACOP, right? What about our policy documents? Do they need to be updated for this July 1 deadline? And initially, HUD didn't say anything about that in 2024-38. They were silent. And all they said was like, hey, you need to update your forms and processes. But they published some FAQs that go along with the notice. And so in the FAQs, there was a question on this. And essentially what it said was, it's a kind of a weird explanation, but they said the things that are changing, if you have those things in your policy, like the income exclusions are changing. What is excluded from annual income is changing. If you mention income exclusions in your admin plan or your ACOP, then yeah, you need to change those and they need to be updated. Well, every housing authority does that. It's how we know how to calculate rent. Unless you have a really vague, tiny admin plan or ACOP, you probably talk about what's included and excluded from annual income, right? And so yes, your admin plan or your ACOP needs to be updated. I frequently get the question, well, is that a significant amendment? And I can't answer that for you because the fun thing with significant amendments is that HUD says your housing authority defines what a significant amendment is. But yes, your admin plan or your ACOP do need to be updated, most likely because you probably do talk about income exclusions, definitions, et cetera, in those documents. If you have our model policy, we have done that for you. If you didn't get a copy, you can log on to your site, your revision site. If you need help doing that, you can email revisions@nanmckay.com. But we do have a model policy that is compliant with this. So essentially what we have is a policy that has like different versions of chapters, and it has a right now version and a later on version when HOTMA is fully implemented. So yes, your policies do need to be updated. All right, so polling question. Have you done that? Have you updated your PHA policies for July 1 provisions? So the answers are yes or no, but we've done other HOTMA updates, or no, we haven't done any HOTMA updates at all. We haven't touched our policy for HOTMA. So yes, you've updated, you're fully good to go. No, but you've done some other HOTMA updates, or no, you haven't touched your policies for HOTMA.
While we wait for that, Sam, question came in, and kind of a little bit leading here. If you don't update by July 1st, 2 weeks ago, or haven't by July 1st, what are the ramifications? Who's monitoring? What's that about?
In today's political climate where the HUD website has nothing on it and where the focus is on a lot of other things, I don't know. And they're shutting down, field offices and stuff like that. I can't give you an honest answer about what the actual ramifications are, because I don't know who's monitoring or what's going on right now. So are there dire consequences? Probably not. What I will say is taking the federal government out of it, your practice has to match your policy, right? And so if you're doing something one way in real life, but your policy says something else, the consequence is more like legal aid and those kind of folks saying, hey, your practice and your policy don't match what's going on, right? But from a HUD perspective right now, I don't exactly know what HUD monitoring looks like.
Check
Okay.
with general counsel on that.
Yeah.
Polls are back. Look at that.
So yes, fully updated, 47%. Good job, everyone. No, but you've done other HOTMA is 32%, and we haven't done any HOTMA updates at all is 21%. If you don't have our model policy, feel free to reach out. We write model admin plans and model ACOPs. They're fully updated for HOTMA. We can have consultants help you with that. So you can email sales@nanmckay.com if you're interested in that, because we do those updates. For the 47% of you that have done it, good job. It's been crazy. As the person who writes our model policies, I will tell you it has been an adventure trying to keep these things updated for HOTMA. Okay, so let's talk about what that PIH notice said as far as what do we actually need to do right now, right? Because the TBD stuff we're not going to worry about so much. So what do we need to do right now? The first thing is that HOTMA removed the statutory requirement for the earned income disallowance. So you needed to stop enrolling families in the EID as of January 1, 2024. So the last day to qualify for the EID was December 31st, 2023. Families who are already on the EID get to continue and finish out the term. But once they're done, EID disappears entirely. So at any family, like if they, qualified on December 31st, 2023, they have 2 years on EID. Once all your families are done, you're done with EID. So make sure that you're not enrolling families in the earned income disallowance. Your software should have been updated at this point to make it so families don't get that. The next thing is everyone needs to be using the new Form HUD 9886A. So forever, we've been using the Form HUD 9886. We have to transition to the 9886A. You have to transition to that form now if you haven't already. The new form was applicable starting February 1st of this year. The old form is now obsolete. So the old form expired January 31st of this year, and the new one came into play on February 1. You were allowed to start using this form way back in January 1 of 2024, but now you must do it. It's the only approved version of the form. And the good thing about this form is that it only needs to be signed once. The 9886, right, needed to be signed initially, and then it needed to be signed every year at annual. The 9886A is signed once, and then folks don't have to sign it again unless they're adding someone to the unit or a minor turns 18. And so just make sure that in your re-exam packets, in your packets for new admissions, that you've swapped out the old 9886 for the 9886A. It's on HUD Clips. You can just go to HUD Clips and grab it, or you can Google 9886A. It's one of the things that is still on all the HUD websites. So make sure you're using that form.
Point of clarification, we're talking PIH, not multifamily HOTMA, right?
Correct. Multifamily has a 9887 and 9887A. To my knowledge, they have not released the new 9887 yet. We've been waiting around for that, and to the best of my knowledge, I have not seen a 9887. So 9886, just to be clear, is used in public housing, HCV, and PBV. One of the biggest mistakes I see is that people who transition to a PBV program, like under RAD, think that that is project-based Section 8 and they have to use a 9887. That's not true. PBV is a component of the HCV program. So in your public housing, your HCV, and your PBV, you need to use this new 9886A. Multifamily, you're using the old version of the form, the 9887, and waiting for the new form. But multifamily is not doing HOTMA right now, so you're okay.
Thank you.
Okay, so here's what the notice said as far as what is applicable. So we talked about don't enroll families in EID anymore, use the new 9886A. The July 1 deadline, there's actually only 3 things that have a July 1 deadline. Now, one of those things is really big, but there's only 3 things that have a July 1 deadline, and that is income exclusions, the new definitions under HOTMA, and what are called de minimis errors. That's it. On that list, you do not see assets, you do not see adjusted income, you don't see annuals or interims, and you don't see the asset limitation. Those things are not applicable yet. The only things that are applicable are the things that are listed in this notice. I'm going to go into a little more detail on this, but income exclusions, definitions, de minimis errors, those are the things listed in the notice. So when I say income exclusions, this is the biggie. You have to implement the income exclusions at 24 CFR 5.609B. And essentially what this means is, I think I have a picture of this actually right here. The old regulations said, hey, this is what's included in annual income and this is what's excluded from annual income. HOTMA changed that and they made it so that the regulations only say what is excluded. So when HUD says, hey, you have to implement income exclusions, what they mean is everything related to income, all the income provisions, because now the regulations only talk about what's excluded from annual income. They do not talk about what's included. So if you pull up 24 CFR 5.609, right, in the current CFR, and you go to B, everything under B is what they're talking about. Now, if you actually go look at that and you're kind of a nerd like me who reads regulations all the time, and you look at 5.609B, you will notice that B1 talks about assets. And then the rest of B, B2 and below, talks about income stuff. And so I emailed Todd and I said, hey, you said to implement 5.609B, but you also said none of the asset provisions are applicable. Can you clarify? And so in those FAQs, they said, whoopsies, 5.609B1 has to do with assets. Ignore that. What we really meant was 5.609B2, right? And everything that's below that. So again, in plain English, what that means is everything to do with income is applicable because again, HUD and HOTMA changed the regulations to say only what's excluded. It doesn't list what's included and excluded. So when HUD says you need to implement all the income exclusions, they mean, hey, everything related to income. So you can find those at 24 CFR 5.609B2 and below. It's also in that notice that I said that was your HOTMA guidebook. PH 2023-27 has a list of income exclusions. It has different attachments that talk about the different income exclusions. Okay, the biggest one, we're not going to do a full training here, but the biggest one that's different is what you do with student income. So student financial assistance in public housing, you may be counting it, even though you never have before. And in your Section 8 programs, you're going to be looking at it differently than you were before. So that's an important one to get training on. The other thing that is applicable now are definitions. So in HOTMA, there were a bunch of new definitions, some of which are just putting stuff in the regs and some of which are actually impactful. So those are the new definitions listed on your screen. There's a definition of earned income and unearned income. We've always kind of known the difference, like earned income is wages, unearned income is everything else, but there wasn't an actual regulatory definition before. And so now there is, and it basically says earned income is wages and unearned income is everything else. There's a slightly new definition of family. It adds folks who are essentially in FUP to your definition of family. All that means is your admin plan or your ACOP where you define family, you need to make sure you just grab that new definition. There are definitions of day laborer and independent contractor now for the first time. So that gets to your folks who are maybe Uber drivers or do Postmates or DoorDash or something like that. They are considered self-employed and you must count their net business income. That was the case before, but we didn't have definitions of day laborer and independent contractor, so that's helpful. Slightly revised definition of dependent, just because the dependent allowance might change over time. It's not changing right now. It's still 480, but it will over time. There's a definition of foster children and foster adults in the regs because there wasn't before. And basically it just says they're defined as they are defined under your state law. The biggest change is health and medical care expenses. Prior to HOTMA, we just called these medical expenses. Now they're called health and medical care expenses. So on your forms, in your policies, wherever it says medical expenses, you need to change the words to health and medical care expenses. And the big change there is prior to HOTMA, these were 100% defined by your PHA policy. You got to decide what was and wasn't a medical expense. Now there is a HUD regulatory definition of health and medical care expenses that you need to follow. And so that's a big one that you need to make sure is in your policy. And then finally, there's a definition of minor, again, not a big change. So the biggest one is health and medical care expenses. All right. And then finally, you saw that little box that said de minimis errors. Essentially what this is talking about is you won't be considered out of compliance during like a HUD compliance review, whenever that happens, solely due to what are called de minimis errors in calculating income. And they define that as a difference in the determination of a family's adjusted income of $30 or less per month or $360 a year. And so these are talking about essentially small calculation errors. You're not in trouble for doing that in a HUD review, but you of course still need to take corrective action if a family's been overcharged, right? So you need to go retroactive to the effective date of the error, and you have to credit or repay the family. You can't make families repay when it was a PHA mistake. So this is just saying during a HUD review, you wouldn't be in trouble, but you still need to fix it with the family. And then there are some other provisions in the notice. There was like a teeny tiny footnote at the bottom of the notice that had some other stuff you could do if you wanted. So these are optional. You don't have to do them, but I would recommend doing them because, you know, why not? Well, one of them I'd recommend, the other one we can talk about for a sec, but these two teeny tiny footnotes with optional stuff. One says you can choose not to use EIV during interims. If you want, you can change your policy to say, we are only going to run EIV at annual. We're not going to run it at interims. Or you can change your policy to say, we will run it at annual. And then at interims, we may run it, you know, we have discretion to run it, something like that. But the option is you can choose not to use EIV at interims anymore if you want. The other thing is you may, but you're not required to use safe harbor income determinations from means tested federal assistance programs. What that's talking about is there's a provision under HOTMA that is 100% optional, or instead of you verifying a family's income, you take a verification from another federal assistance program, like maybe the folks who do SNAP in your area, or maybe they're in a blended unit and you take the determination from the other program, something like that. And you would not third-party verify their income. You would still verify their adjusted income source, like, you know, medical expenses or childcare expenses, things like that. But for income, assets, their total annual income, you would just take a verification from another program. So you're allowed to do that right now if you'd like. You'd need to put that in your policy before you do that.
Do they have to print the EIV, or do they just have to view it?
At an interim,
Yeah.
you would do nothing. You wouldn't pull it at all.
Okay.
If you want to do that policy. Okay, so next poll question, have you done this? Have you stopped using EIV at interims? So your options are yes, no, and we're not going to. We want to keep using EIV because we want the information, or no, but we're thinking about it. So yes, no, and we're not going to, or no, but we're thinking about it. So yeah, if you go for this and you say we're not going to use EIV at interims, then you don't have to do anything. You don't even have to look at it. You know, print it, you don't do anything.
Don't have to keep in the file, or do?
Nothing.
Nothing.
Don't pull it, don't do anything.
Cool.
You still obviously annual would, but although I will say if you do the safe harbor thing, you also don't pull EIV at annual.
Or remind folks to send in questions into the queue. There's a question and answer box for that. You can chat it if necessary as well. We've got a couple in there that I'm holding for you, mostly logistical in nature, but we'll get to that in a sec, Sam. Looks like our poll's back.
All right, so it looks like the majority are saying no, and we're not going to, and then about even on yes and no, but we're thinking about it. The sense that I get from folks is they like pulling EIV just because, you know, there could be information there about new hires or something like that, and it's not super difficult to go pull an EIV report, right, for an interim. So it's really up to your agency, you know, kind of your program best and what works for your program. Going back to the safe harbor topic for just a second, if you do choose to adopt safe harbor income verifications, right now there isn't a code on the 5.8 for that. Right. On the new 5.8, there will be. And so what HUD said is in the interim, when you're coding income, what you would do is you would code that under the head of household's name, and you would code it as N non-wage source. So essentially, let's say you get a verification from SNAP that says the Jones family has $40,000 in annual income. You would just put, you know, head of household, whoever Jones, and then you put non-wage source and you'd put 40,000, and that would be it. You wouldn't break down the income or anything like that. You just put the total amount. Okay, has anyone implemented safe harbor verification provisions? So your options are yes, no, and we're not going to, or no, but we're thinking about it. So again, these are taking income determinations from other means-tested federal assistance programs that the families might be on. Obviously, it won't work for every family, but for those that do have some sort of other federal assistance, you could use income determinations from those other programs, and you would not verify their income or their assets. Again, you would still verify factors related to adjusted income, like their medical expenses, childcare expenses, things like that. I will say this tends to be unpopular, and I will talk to you a little bit about it once we see the poll results about, you know, things to consider. So for anyone who's a no, but we're thinking about it, I'll kind of talk to you a little bit about what to consider. I'll give you one more second to respond. All right, let's see. 10% said yes. 51 said no, and we're not going to, and 39 said no, and we're thinking about it. Yeah, so I will say in general, when I ask folks about this, it is a much smaller number of folks who are actually doing this. Initially, when I read this, I thought, no way, absolutely not. I'm not going to get verification from some other program. Who knows how they calculate income, right? I had a bad attitude about it, essentially. And then I was doing a training in Las Vegas. We do these big HOTMA summits where we like spend 2 days talking about HOTMA. And we were doing one in Las Vegas. And I had someone in the audience who was from an MTW agency. And they had actually been doing this for years, where they took income determinations from other programs as part of their, you know, MTW activities. And she said initially when they implemented this new MTW initiative, they calculated income the old way using third-party verification, and then they used this new way where they grabbed safe harbor, and they did like a comparison to see like how wildly different was it for families, because obviously families pay income-based rent, right? It makes a difference. And she said in the vast majority of cases, the income was the exact same. And so then I was like, oh, all right. I mean, think about the amount of time that saves you just getting a verification from somewhere else and not third party verifying yourself. So now I've kind of changed my tune on it, and I think it can work with some caveats. And those are, I would, for new admissions, still third party verify income. So I had a baseline, you know, with third party. I'd probably only do this at annuals. I wouldn't do it at interims or new admission. I'd probably only do it at annuals. For FSS families, I would get actual third-party verification, right? Because it might mess up what they're escrowing. And then I wouldn't take determinations from the tax credit program. And the reason for that is in the tax credit program, they tend to estimate income on the high side because folks aren't paying an income-based rent. And their job in tax credit is to make sure no matter what, that person's income eligible. So I think if you do it at annuals, You don't take tax credit determinations. You make an exception for FSS families. I think this could actually cut down a lot on, getting third-party verifications. I know we're control freaks and we're compliance people and we like to, touch all the pieces of paper. But again, your agency, and this could help you with processing annuals, particularly if you're really behind in doing your annuals. So it is something to consider implementing. And, if it doesn't work, you could always go back to the other way and not do it anymore. So
Good best practice actually answers a couple questions we're seeing. So good.
And then besides the stuff that was in the December PIH notice about the things you have to do and the optional things, back in February of 2024, HUD did put out a notice about some optional things that you could be doing under HOTMA that you don't have to do right now, but you can do if you want. Some of the things that were in that notice were covered by that, by this FAQ, but I just want to point out a couple others. Excuse me. So a couple optional things you can be doing right now if you want is that HUD said you can start accepting verifications that are dated within 120 days of the date received by the PHA. So right now, pre-HOTMA, the current language says verifications have to be dated within 60 days of the re-exam or the PHA request. And so if you want, you can change your policy to say verifications can be dated within 120 days of the date received by the PHA. Give yourself a bigger window. And that's kind of one of those ones like, why not give yourself a little bigger window for verifications? The other thing is the thing that goes in conjunction with that is HUD said you can say, but for fixed sources of income, we will accept a statement dated within the appropriate benefit year. In other words, if someone's receiving Social Security and it's November and you're doing a new admission for them, right? And they have a benefit letter that's dated January, right now that's too old, right? That's dated outside of 60 days of the re-exam or PHA request. And so you'd need to get a newer one. If you adopt this policy, that's dated within the appropriate benefit year, right? And so you could use that. So I think this is a great policy to adopt. You will eventually have to adopt this anyways once full HOTMA goes into place, so you might as well do it now. So third-party verifications dated within 120 days of receipt by the PHA, except for fixed sources of income where you'll take a statement dated within the appropriate benefit year. Again, once full HOTMA comes along, you're going to be doing this anyways. Might as well do this now. This gives you a lot more room as far as collecting verifications. You would need to update your admin planner ACOP though. Go ahead, Brian.
A good tip. Kind of playing this out forward. That makes sense. Why not do it now?
Yeah. So. And then this one is kind of a small one, but this is about verification of Social Security numbers. Again, eventually, this is an optional policy, but it makes your life a little bit easier. So why not have it? Essentially, what this says is right now, to verify someone's Social Security number, they either have to provide us with a Social Security card or a letter from the Social Security Administration with their name and social, or a letter from another government agency that has their name and social on it, right? And that's what you must accept right now. You cannot say just Social Security card. Any of those three are fine. What this does is this expands a little bit what we can take. And basically what it says is if the individual doesn't have any of those three things, you could accept a self-certification of their social along with some other third-party document that's not issued by like a government agency. So like maybe they're like a bank statement or something like that that has their name and social on it. And essentially any piece of paper that has their name and social on it that's, a real piece of paper, along with a self-certification would work. The reason for this is, first of all, we verify Social Security numbers in EIV anyways. So all you're getting this for is to verify, is their declaration of what their Social Security number is. You're going to third-party verify that in EIV. The other reason for it is, particularly if you house a lot of homeless individuals, they may not have like their Social Security card on them or something from a government agency with their social on it. And so if you're working with a lot of with homeless populations, this can really be helpful that they can just bring you anything with their name and social and do a self-certification. So this is an optional policy, but again, why not put it in your policy for those, few situations that you run into where this could be helpful. Okay, so if we look at the full list, everything you must do, plus all the things you may do, this is the full list right now. I'm calling this phase one implementation. That's not a HUD term. I just made it up because I needed a way to organize this in my brain. So the way that I'm thinking about this is there's phase one, which is the stuff we do now, and then there's phase two, which is to be determined. My coworkers are calling this HOTMA now versus HOTMA later. You could call it that, whatever you want, right? I just needed to make up some term to like make this make sense. So for me, it's phase one versus phase two. So phase one, this is the full list. Stop enrolling families in the EID. You already needed to do that. Use the new 9886A. You already needed to do that. Income exclusions, definitions, de minimis errors, those are the mandatory ones that you needed to start July 1, 2025. And then your optional things you can do now if you want are using safe harbor, stop using EIV at interims, third party dated within 120 days, unless it's a fixed source of income, which means you could use appropriate benefit year, and self-certification of social security numbers. So that's it. If it's not on this list, it's not applicable. Okay, so what the notice said, the December notice said was the 7/1/25 compliance date does not apply to other HOTMA provisions that are not listed in the notice because other provisions are dependent on HIP or some other systems implementation. And so these are the things that are on hold. This is phase two, or you could think of it as HOTMA later or HOTMA TBD, whatever you want to call it. All of the asset provisions are on hold, including the asset limitation, which means you just keep calculating assets the way you always have right now, okay? The asset limitation, do not apply it. You know how there's a limit on owning property or there's $100,000 cap on assets? Do not apply that. You cannot apply it yet. It is not applicable. Don't deny anyone's assistance. Don't terminate anyone from the program. The asset limit is not applicable yet. All of the adjusted income provisions are on hold. You can't use the new 525 instead of 400 or anything like that. The only exception is that the definition of health and medical care expenses has changed. Other than that, none of the other adjusted income provisions are applicable, and it's business as usual. Keep calculating it like normal. None of the inflationary adjustments are in place. I'll talk about passbook rates in just a sec. The new verification hierarchy that allows for EIV plus self-certification is not in effect yet. Annuals using the previous 12 months of income is not in effect yet. None of the weird new interim rules are in effect yet. So right now, interims are still totally up to your PHA policy, and whatever you've been doing for interims, keep doing that. And then HUD made up this new term called non-interim transactions. That's not applicable yet. Let me talk about passbook rates for just a second. Passbook rates, right, are what you apply when a person's assets are greater than 5,000. I get questions all the time. Well, HUD publishes a passbook right now. Do we need to use that? No, it's up to you what passbook rate you use. There's an old notice from 2012 that says housing authorities set their passbook rate based on, certain numbers. You can keep setting your passbook rate. So if you want to use the new HUD passbook rate, you can. If you want to keep using the one you've been using, good for you. Anything is fine. So as long as you're, in compliance with the regulations on passbook rates, you keep setting your own passbook rate. So if you want to use the HUD one, that's fine. If you want to use the one you've been using, that's fine too.
Awesome. And we just got about 10 more minutes, or let's say 8 more minutes to go here. And we are moving to the question part. So I'll remind folks to ask their questions again. We do have a couple. Sam, we're going to bounce around a little bit, but we appreciate all that information. Thank you so much. I'll remind folks that you can continue to gather information on this as we continue to get some information for you. You can follow us at higroup.com. You can follow Sam and her team on nanmckay.com. I'll also remind those folks that are interested in training on this. We at Online Training within HI Group have a lot of different topics, some of which are updated for HOTMA, some of which are becoming updated for HOTMA. We're doing our best to keep that as relevant and timely as possible. We offer a subscription package. Many of you guys subscribe now. It's the Netflix for housing professionals. That's what I typically call it. So that could be of use to you as you continue to uptrain your staff. So keep that in mind. We also work with Nan McKay and other partners as well to bring to you certifications and whatnot that are relevant to the industry. So Sam, I gave you a break for a quick second there and certainly want to allow you to talk about any other features, options that you can have, people can explore with Nan McKay, but I do have a couple questions. So let me hit you with a couple of these and then you can roll some of that stuff into this before we wrap. Safe harbor. Let's go back to safe harbor for a second. What would happen if you use safe harbor and the tenant underreported their income to the other programs?
My question is, how would you know? But if you did find out, HUD hasn't addressed that, but I would say that I don't know, I think that's honestly a question for legal counsel, because what action can you take when you use the other programs determination? I don't know. I think that's a good question for HUD. So there's HOTMA questions at HUD.gov, and you can email them. So HOTMA questions at HUD.gov. And I think that's a good question for them. Because I don't know, legally what ramifications there would
Sure.
be.
Yeah, always advise check with general counsel.
Yep.
Staying on safe harbor, question is, what if the income reported to SNAP does come from wages? I think there's some confusion around the current 58. Doesn't make sense. Any thoughts on that?
Yeah, as far as coding it as non-wage source, yeah,
Correct.
it doesn't matter.
Correct.
So essentially what happens is we're taking whatever like final number they have. So whether it's from assets, asset income, wages, whatever, essentially we don't like see that part of the verification. All we see on the SNAP printout is what is the total income, and we put that on the 5/8. So you still code it as non-wage even if you see that it's from wages, because it's showing that you use safe harbor essentially.
Yeah. Awesome. Let's talk a little tech, if you will. Question on PIC. The new elderly disabled deduction is $525, and per HUD, that's per HUD. There's some scuttlebutt that the software vendors are communicating that the PIC 5058 does not accept that new amount. Have you heard this before?
Yes, correct. So it's hard coded into the 5058 as $400. If you look at a 5/8, right, it doesn't give you an option to like write in an amount. It says elderly disabled deduction of $400. It's your only like option. And so correct, they can't program in 525. So that's why we're not giving it. And same thing with medical expenses going from 3% to 10%. 3% is hard coded. It's in the words on the 5/8. It says, multiply by 3%. And so that cannot be changed. The new 5058, if you look at it, will accept 525 and go from 3% to 10%. But because we're in PIC, we can't do that. So again, I have heard multiple times that there's no way to fix that in PIC, but allegedly now maybe there is.
Got it. Thank you. Safe harbor question. Using the N code for safe harbor, doesn't that impact FSS?
Yeah, that's why I would make an exception for FSS families. It also impacts them in that we want to be accurate about what we're, putting in their escrow and all that. So I think it's worth it if you have an FSS program to make an exception and just get third-party verification for FSS families.
Yeah. And can you apply the asset limitation for eligibility applications?
Don't. No, not applicable yet. Don't do it.
So I want to give you the opportunity to talk about anything Nan McKay is up to doing. Folks can reach out. How would you like to wrap with that?
Yeah, so if you need model policies updated, if you don't have a model policy, or if you do, but you haven't updated it in a really long time, you can email sales@nanmckay.com and they can either get you a model policy or get you a consult to help update yours. If you do have a model policy and you just need your revisions, again, revisions@nanmckay.com can help you out with that. All of our trainings are updated for full HOTMA right now. So if you take one of our rent calc or specialist class, it's not just the July 1 stuff, it's everything. I am currently working on transitioning our classes to have an option where it's like right now HOTMA, where you do the July 1 stuff and then the old stuff. It's going to take us a little while to do that because there's only one of me, but we're hoping in the next few months to launch that. So right now, your only option as far as certification courses is full HOTMA. So just keep that in mind, but you can obviously get training on that. I've been doing webinars on HOTMA. We have a larger webinar on July 1 implementation. So all of the things I just talked about, like changes in income definitions, I go through each one of those in detail. I've already done those webinars, but they're available for purchase. Again, you can email sales@nanmckay.com if you want to watch a recorded, like what's happening July 1 webinar. That has a lot more detail. Yeah, I think that's about it.
So I'll point out the self-paced certifications that we offer in conjunction that are available online. We do have what I call HOTMA courses. So if anybody's looking for nothing touched by HOTMA, we have those available. And we do have some of our certifications available with pieces of HOTMA in there as well, and the self-paced version of that too. So again, between Nan McKay and HI Group Online Training, we're working our best to get these up there for you in different formats. Everyone's got different learning styles and require different needs. So we're here to meet those needs for you as best we can. We do thank you for attending today and hope that we were able to get you some answers. And Sam, you did a wonderful job explaining this complex change to our industry. So we thank you for your time. And with that, we're going to take this to a wrap, but feel free to reach out if you need more. Again, have a great day, guys. Thank you.